Right now, the crypto world is, well, it's being torn in two. On one side, it's getting this big Wall Street makeover, looking more polished and legitimate than ever before. But on the other side, the ghosts of its wild, unregulated past are showing up for a major day of reckoning. So which is it? Where's this all heading? And you can see this paradox playing out in the headlines, like right now. You'll see Bitcoin flirting with these staggering new highs, pulling in all this institutional money. And then, in the same news cycle, you see one of the biggest frauds in crypto history ending with a guilty plea. So what gives? Understanding this contradiction is really the key to figuring out what's next for crypto.
Okay, so here's how we're going to tackle this. First, we're going to look at Wall Street's huge new bet on crypto. Then we'll get into the massive crackdown on fraud that's happening. After that, we'll see how Washington is both helping and kind of hindering the whole thing. And finally, we'll see how all this drama is shaking up the market itself.
First up, let's talk about the money. Because crypto isn't just for, tech enthusiasts in their basements anymore. We're seeing a serious, full-on embrace from the very heart of traditional finance. And maybe the biggest signal we got this week, it came from the digital asset exchange Bullish. They just had this blockbuster debut on the New York Stock Exchange. We're talking a $1.1 billion fundraise. That is a massive vote of confidence, especially considering their last attempt to go public kind of fizzled out a couple of years back.
But here's what's really fascinating. It's not just the amount of money, it's who's writing the checks. I mean, look at this list of backers. It's a who's who of finance and tech. You've got BlackRock, JP Morgan, Cathie Wood's ARK Invest, Peter Thiel. These aren't your typical crypto traders. This is the establishment, and they are betting big. And it gets even weirder, and honestly, more interesting. We're seeing this deep blending of the old and new worlds. So you've got this NASDAQ-listed firm, ALT5 Sigma, right? They raise a boatload of cash, and what do they do with it? They buy up a bunch of DeFi governance tokens and stick them right on their corporate balance sheet. Then, to complete this wild mix of Wall Street money, crypto tech, and political connections, they add the token CEO and Eric Trump to their board. Wow. Okay, so that's one side of the coin. But let's flip it over. Because at the exact same time Wall Street is rolling out the red carpet, the industry's past is knocking on the door, and it is not a friendly visit. The courts are getting involved.
And the poster child for this whole crackdown is Do Kwon. He was the, swaggering face of Terraform Labs. His massive Terra/Luna project imploded, just wiping out people's life savings. And this quote, man, it just hits you, right? It gets to the real human cost of all this. While the legal wheels turn, for the people who lost everything, the damage is already done.
And the hammer is definitely coming down hard. I mean, just look at the fallout. He pleaded guilty. He's facing up to 12 years in prison. He has to forfeit over $19 million. And on top of all that, there's a separate $4.5 billion settlement with the SEC, plus a lifetime ban from the industry. This is a huge deal. It's setting a major precedent for how these massive crypto frauds get handled.
This same push and pull, this tug of war between legitimacy and risk, it's happening in Washington too. And honestly, the signals that regulators are sending, well, they're all over the place. So on one hand, the door to the mainstream just got kicked wide open. A recent executive order signed by President Trump basically tells government agencies, hey, figure out how to make it easier for people to put crypto in their 401k retirement plans. And let me tell you, that is an absolute game changer.
So why is that such a big deal? Well, get this. The U.S. 401k market is a $9 trillion pool of capital. $9 trillion. Just think about it. Even a tiny 1 or 2% slice of that massive pie flowing into assets like Bitcoin, that would be like turning on a fire hose of demand that just doesn't shut off. But at the very same time, you have other regulators putting up new walls. So, nope, it's not all sunshine and friendly handshakes from Washington. Not by a long shot. And a perfect example of this is the Google Play Store. They've got new rules. And basically, if your app is a custodial crypto wallet, meaning you're a company holding the keys for your users, you now have to get these super expensive, hard-to-get banking or money transmitter licenses. It's a huge new roadblock that could lock a lot of apps out of the market, even though wallets where you hold your own keys are okay, for now.
Okay, so you've got big money coming in, you've got major courtroom drama, you've got regulatory whiplash. It's a lot, right? So how is the actual market handling all this chaos? What are the charts and the prices really telling us? Well, one key metric that traders are watching like a hawk is called Bitcoin dominance. It's pretty simple. It's just Bitcoin's share of the entire crypto market pie. And recently, it actually slipped below 60% for the first time since February.
Whenever that happens, people start whispering. They start speculating that maybe money is about to flow out of Bitcoin and into all the other smaller coins, the so-called altcoins.
Meanwhile, you've got the number 2, Ethereum, which is grinding its way up towards $5,000. Activity on the network is almost at an all-time high. But it's not a clear run. Ethereum is actually bleeding market share to a whole crowd of faster, cheaper rivals, both other L1 blockchains and even those L2 scaling solutions built right on top of Ethereum itself.
So all of this brings us to that timeless question, the one that echoes through crypto circles every single bull market. Are we finally on the verge of a true alt season where smaller coins just dramatically outperform Bitcoin? Or is this just another false alarm? Another case of crying wolf before the market pulls the rug out. The signals are super mixed, but the anticipation, you can feel it.
And that's really where we're at, standing at this incredible crossroads. Big money is betting on a legitimate, regulated future. Washington is opening the door for trillions in retirement funds to pour in. But at the exact same moment, the consequences for past sins are finally catching up and new walls are being built. So the defining question is, which force wins? The pull towards mainstream acceptance or the gravity of its untamed, risky past? The answer to that is going to shape absolutely everything.